This week, Ben and I get a look at tariffs along with distillate fuel adjustments, and then rounding out the conversation today with some fertilizer talk. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing well. How are you today, Will?
Doing all right. You know, it was a rough sports weekend for the Missouri teams between Mizzou, their tough loss to Texas A&M, and then whatever that was in the Super Bowl. But,
It was a little rough.
we pick up and move on. I'm not even really a huge Chiefs fan, and that was still tough to watch. So.
Yeah. It was tough to watch. We started throwing darts in the middle of the second half, so we didn't even finish watching the game.
Yeah. Well, anyway, the market's not as rough. They're mostly higher across the board. Here's a quick rundown for you. Looking at that March corn contract up 5 cents at 487. December corn up 6 cents at 466. Soybeans for March are up 7 cents at 1049. November soybeans up 6 cents at 1057. Soybean oil was just about flat on the week at 45.98 on a cents per pound basis. Looking at that soybean meal contract for March up 30 cents a short ton at 301.40. Wheat for March was looking 23 cents up at 582. July wheat up 22 cents at 606. Got that March cotton contract was down 0.25 cents a pound at 65.63. And then that West Texas Intermediate crude oil contract down $1.53 per barrel at $71 even. So, Ben, a lot of light gains week over week. We have seen a little bit of, slight radical movement within the markets surrounding some of these trade talks and surrounding some of these other pressures. But overall, you look at this and you can't be overly upset as far as a week-to-week change on the ag front.
Yeah, I would agree with that. I look at these prices and this price increase that we saw this last week came even though we saw, the South America crop growing, or well, at least the Brazilian crop growing and people expecting that USDA is going to print a larger production estimate for both corn and soybeans. And so, to get the rally in addition, or I guess the rally despite, growing global supplies, I think is really solid. The commodity I just want to pick out every week. I feel like I need to pick out one commodity just to give kind of the MVP award to. Wheat. Look at what's happening in our wheat complex. Finally a little bit of a bounce here. I think there's a lot of wheat both in the global market, but then even our winter wheat acreage are maybe a little bit stronger currently than what we thought. So I do think there's supply coming, but that winter wheat market or that wheat crop was able to rally. And you look at July 2025 wheat. So new crop winter wheat up 20 cents and above $6 now. So on the futures market, that's something we haven't seen in a while. I should have looked up and looked when the last time July futures was above 6, but it's been a little while. So.
Well, and it is a promising sign when that deferred contract is higher than that nearby. It kind of speaks to maybe a positive undertone to the market, or at least more positive than where it was. So it's always nice to see. But Ben, we are seeing, a lot of international turmoil on the trade front potentially. We just saw Trump announce new tariffs, 25% on certain non-ag items, but then supposedly more is to be announced this week, and then you have to expect there might be reciprocal things coming out of other countries heading back to the U.S. So far, Ben, largely agricultural products have avoided a lot of the trade tariffs and a lot of the targets. But you'd have to imagine the longer this goes on, the more likely that becomes a possibility.
Yeah, I think so too. I keep getting asked how this round compares to 2018 when we went through this a few years back, and would we see similar kind of market shifts and frankly even policy playing out? And I'm just not convinced. And I keep telling people like this one has so many things that are different, both in terms of how the economy has changed, competition from other players. There's a lot of things different about this go around, and one of the things that you just you can't do if you're any leader of a country is you can't starve your people, and that's a crude term there, but you can't create food prices so high, or you can't create a scenario to where the food businesses are having to pull back strongly. And so one of the things that I think is different this go around than it was last time is global stocks aren't as plentiful, and so you start thinking about, well, you know can people place tariffs on ag products and get by with it. And I'm not sure. I don't know how this plays out, and that's the honest truth. And I don't know if anybody does. Tariffs can cut both ways, especially if it's taxing the product coming in to the country. So for an example of that, this just in the last week, we've had quite a bit of language around ethanol markets, and two in specific. President Trump met with the Japanese Prime Minister, and they talked about a number of things, but one of the things that came up was about Japan buying U.S. based ethanol. Now they're not a huge ethanol buyer. I don't even know if they're in the top 10 most years, and but them buying additional ethanol to help kind of balance the trade balance, that would be supportive to agriculture producers. The same thing as we've heard some renewed talk about reciprocal tariffs. If you place a tariff on us, we're going to tariff you, and one of those categories is Brazilian ethanol. So could we see the U.S. put a tariff on Brazilian ethanol imports into the United States, creating an opportunity for U.S. ethanol to see a little bit of a demand boost potentially, right? So I sit here and say this can all cut both ways, and I don't think anybody knows where it is. I don't think this is the last episode we're going to be talking about tariffs, and probably not the last episode for a while. The management decision around this is, just keeping your powder dry in a lot of ways, right? Having a cash reserve, being well documented, being intentional about what you're doing, because these markets are moving, and tariffs create a dynamic to where markets could move very quick. So keep your powder dry.
Well, and like you said, agriculture is in an interesting spot. From one standpoint, you get that slight protection, to where the quickest way to turn people against you would be to raise the cost of things like food, things that are definitely essential. So on the flip side, I guess the idea behind tariffs is to boost domestic industry for those things. You can't really make more farm ground. So it's not, maybe some of those residual agricultural businesses might see boosts if there are tariffs in place to where it would incentivize more American production of certain things. But obviously, as far as growing, I feel like we're largely maxed out. But Ben, looking at other areas, looking at distillate fuel, looking at diesel production, we've been dropping, hundreds of millions of gallons week over week. We're kind of in this lull here in February. We're not around the holidays when people are driving, and we're not in the summer driving season. So is this largely just supply and demand, or is there something larger at play?
Yeah. So, from a national perspective, we do keep tightening that diesel fuel supply. As you mentioned, we were down again this week. Our U.S. diesel fuel stocks are 7% lower right now than they were this time last year. We're also 12% lower than were against the 5-year average. The reason I kind of wanted to talk a little bit about this is if you looked at the national numbers just alone, you would sit there and say diesel prices have every reason to move higher, right? That they're going to face some headwinds as we look ahead. However, diesel fuel, just like all the other energies, is sold in PAD districts. And don't ask me what PAD stands for. It stands for, I think, Petroleum Administrative District. And then there's another D. I can't think what it's called. But long story short is like our PAD district here in the Midwest for diesel fuel supplies is very well supplied. In fact, we're at the top end of a 5-year range when it comes to diesel fuel. So I think that gives confidence to me that maybe we don't see as strong a diesel fuel price rallies here in the springtime during the heavy load season where farmers are out planting and stuff. I don't know if we'll see as strong of a rally as what we could in other parts of the country.
Well, Ben, before we run out of time here, I also want to touch on the fertilizer market, what we're seeing there, a little bit of mixed action across the board, some higher, some lower on some of these fertilizers. What's your expectation on how we might see those prices continue to adjust as we move into the most critical time for when farmers are going to need that?
Yeah, so my general bias here is that fertilizer prices are going to move higher as we get closer and closer to spring. I think there's certain product categories that I think are going to see more of a rally than others. So maybe not as much, a nitrogen rally for anhydrous as what we see in maybe the potash market or something like that. And there's reasons for that, and there's global supply and demand that comes into play here. Folks that we do buy a lot of potash from China or from Canada, and other fertilizers out of the Canadian market as well. And so how the policy discussion and tariff discussion goes with Canada here in the next 20 days, I think is going to be really, really important to kind of the future price action that we see in the fertilizer markets.
Well, and it's interesting too, because that's something that could be impacted or disrupted by tariff pressure as well. So, as you alluded to there, so very interesting to keep a close eye on that. Well, Ben, looking at the rest of this week, we have some big reports coming out. So why don't you tell farmers and ranchers what they should be watching for?
Well, I don't know if anybody wants to watch a congressional hearing, but I just want to I want to mention that Jerome Powell does testify before Congress on Wednesday of this week at 10 a.m. Central Time. So that'll be really interesting because I think the Federal Reserve. We've talked about this before on the show. The Federal Reserve is in a unique position. So hearing Jerome Powell talk about it and at least explain their positions to Congress, I think will be very interesting. We also get some other inflation data out this week. So the consumer price index out Wednesday, producer price index out on Thursday for the wholesale prices. And then we're going to wrap it up this week on Friday with the National Oilseed Processors Report. So those are kind of in addition to our normal things. And then just a reminder, next Monday, February 17th is President's Day. So we do see some shift in market action and reports.
And then for viewers of our program here, the report will already be out, but the USDA's Global Supply and Demand Estimates update for February comes out Tuesday, February 11th. So today.
Yep. A little bit later this morning.
Or if you're watching this when I expect you to be watching this, it's already out. So go look at those numbers. All right. Well, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can check us out at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.